Hello and welcome to another edition of the Wealth Nation podcast. I am Yolanda Harry Prasad, Wealth Advisor at Solomon Wealth, and it is my goal on the Wealth Nation podcast to bring you easy, actionable tips, content, and strategies that you can use to manage your money well, to live abundantly, and build generational wealth. Thanks for joining me on this new edition, and if you're new here, always subscribe. Hopefully, I get to teach you something different from a South African perspective about finance. And every Monday, a new episode is released. And go back, listen to our other episodes. We're about 115 episodes down already. So go back and listen to all of that valuable information that we had shared over the years. So can you believe we're in November? 1st of November it is. And just 2 months away until 2022. Lots of exciting stuff coming up for the new year. We're busy planning some really cool stuff. And the first thing that I'm so excited to share with you on this platform is our new business network. And if you're a business owner, go to our website. It's www.financiallyfabulousfemales.com. Look out for that icon that says Business Network and click on that. We're launching a new business networking platform exclusively for South African small and medium-sized entrepreneurs, female entrepreneurs, and we're creating a whole network just for you to interact, to engage, and to grow your business among each other. So go and check that out. I'm sharing with you some exciting stuff that we have lined up for 2022 on that. The Wealth Nation podcast is brought to you by Solomon Wealth Management. Solomon Wealth Management is an innovative team of wealth managers that addresses the entirety of your life, your family, your business, your future, one facet at a time. We use our skill and expertise to the consideration of what you have accumulated and how best to administer it through life's changes. From financial counsel on managing your wealth to careful contemplation of how to transfer it to future generations, it's your vision for your future combined with our skill and expertise to help you reach financial excellence. So if you want to sit with us one-on-one, go to www.solomonwealth.co.za, click on the Get Started button, and we could be chatting one-on-one. All right, so for now, though, today we're kicking off on cryptocurrency. Now, if you invest in cryptocurrency, last week was a major week. We saw Bitcoin surge to its highest level ever, not just Bitcoin, but Ethereum as well. And today we're going to talk about how we can deal with the price volatility of crypto and Bitcoin and everything else. So historically, Bitcoin has been quite volatile. In a single day in May 2021, Bitcoin plunged about 30% before recovering to about 12%. And we see this week Ethereum, the world's second largest cryptocurrency in terms of market capitalization, reached an all-time high of around $4,400 some change on Friday, topping the previous record high in May this year of $4,379. We also see Bitcoin reach record highs of around $66,974 this coming week as well. And that's an all-new time high. And one thing to know, I'm not sure if it's related or not, but for the first time ever, a Bitcoin-linked ETF was launched on the New York Stock Exchange on Tuesday morning. And that sent a 10% spike on Bitcoin price. It could be related, I don't know. I don't know much about Bitcoin in that sense, but it's just a new market. We're all learning as we go. Bitcoin's previous high point, though, was in April sometime, and you see that surge in April at $64,888 or so. So it surpassed that and reached its highest level ever. One thing is guaranteed, although we don't know much about the prices and which way they go and when they will go there and what's impacting it, we know that a pullback will happen. We just don't know when. We don't know why, but this makes crypto very, very volatile. And if you don't have the stomach for it, crypto is not something that you could take. And that reminds me, the content of this podcast is not financial advice. As a South African advisor, the FSCA does not give us permission to advise on crypto because it's so new. We're not trained on it. Anything we give advice on, we gotta study and write exams on. And the crypto is something that I guess we just haven't reached at that stage yet. I'm excited if they would allow us, and in the future they let us write these exams and give advice on it. But we'll see how the future goes. So in the meantime, this is not financial advice. And even with my clients, we don't sit and talk about crypto. I know if they're investing, and if they invest, it's not on my advice. Okay, so crypto and Bitcoin, it's completely volatile, and it's nothing new. And you should be comfortable with this kind of volatility if you do decide to invest in Bitcoin and other crypto. One of the reasons I think that crypto is volatile is because it's so new. I mean, it's been around more than 10 years now, but compared to things like ETFs and unit trust and the standard stock market, it is pretty new. It's an immature market, and anything from a celebrity tweet can send prices skyrocketing or plunging. And all Elon Musk has to do is hashtag a Dogecoin and prices just flicker. It just flutters all over the place. It can go up, it can go down. Right? That's how volatile cryptocurrency is, and you gotta be able to stomach it if it's something that you're going to be invested in. Now, this sort of unpredictability is part of the reason why investing experts always warn against investing large allocations of your portfolio into a risky asset like crypto. A lot of folks say your crypto holding should be less than 5% of your total portfolio. For me personally, I hold greater. I would say around 8 to 10% of my portfolio is made out of crypto. And it's not because I'm investing large amounts of money. It's because of that volatility and the surges that happen. So although I might not be putting any additional funds into my crypto side, but due to the sudden surges, those volumes and the values that happen there just increase my portfolio and that sector of my portfolio. So for new investors into the whole crypto scene, these kind of swings can be very off-putting, very frightening. But if you are like me and you're into crypto to buy and hold and not really to buy and trade, these dips are nothing to panic about. We keep an eye on the dips because that's when we buy. That's when I buy. Again, this is not financial advice, and you shouldn't be taking any advice on this from me on this platform. This is only for informational purposes. So a pro tip here that I can tell you is don't look at it. I don't look at crypto prices. I look at crypto prices at least once a week, all right? But I don't go into my wallet. I don't go check how much ETH, how much BIT, how much Litecoin or anything I have. I just forget about it. Maybe once every couple of months or so, I have a look. But Bitcoin, I just forget about it because that volatility is not easy to take. So don't check up on it. It's the best thing that you can do. And the thing about investments is you gotta keep your emotions in check. Because if those emotions run wild, it's your emotions that are going to be doing the decision making for you. You're going to be sell when everything is, while you're heated and you're emotional, you're going to lose some money. And the best thing that you can do for yourself as a crypto investor, as a stock investor, as an equity or bonds or shareholding investor, take emotions out of your investment strategy. I think that's the best thing that you can do about investments. If you can remove your emotions out of that whole segment of investing, I think half the battle is won there. So if you let your emotions get too much or let it get the better of you, those wrong decisions can come. So the traditional set it and forget it advice that many traditional long-term investors follow is a great pattern to follow. If you can't get on board with that set it and forget it, forget about crypto or anything volatile for that nature. The extreme dips will continue, and your emotions mean nothing when those dips happen. It's just going to cause you to worry, cause you to stress, and that's not what personal finance and financial peace is all about. If that volatility of crypto does not give you financial peace, stay away from it. So the most important thing that any investor can do, whether you're investing in Bitcoin or shares, is not just to have a plan in place, but to also have a plan that you can stick with. So if you say you're putting 5% of your portfolio into crypto, commit to that 5% and forget about it. Don't be uneasy. If you lose that 5%, okay, you lost it. Take that emotions out of your investing. So while buying at a dip might be attractive for many people, especially in an asset like crypto, it might not always be the best idea for you at the time. All right, so the best thing that you can do to avoid to stomach the volatility and tolerate the volatility is have a strategy where you're not looking at this investment constantly, because those dips are going to come, and it's going to be some deep dips when it does come, and you can't be affected by that. Keep an eye on those dips because those are your investment opportunities. If you're trading, I can't give you advice on trading. I'm not a trader. I'm an investor. So look for those highs and watch your portfolio grow from there. All right, so those are my couple of tips on how you can deal with a volatility. It's the emotions and it's the strategy that's going to help you stomach the ups and downs of the crypto market. So that's it for me on this episode of the Wealth Nation podcast. We'll chat soon.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.